Hello and welcome to another update video about VeChain. On the VeChain chart, we have seen a pullback all the way down to that 1.51 cent level. We've been waiting here for, I remember that when we were up here, I thought we would never get deeper into the support area again, and then we did. And however, it always failed to break above the price channel's upper boundary line. Yeah, this would have given us a signal that this correction is over. In fact, it joined Bitcoin in this liquidation event. Not as bad on this chart, not as bad, but obviously we've had a very much of, well, a very extended fifth wave here in a more bullish interpretation here. So we can still at the moment give it a chance. I mean, I still count that as a 1-2 setup at the moment, but also show obviously here and have always shown the potential that this could just be a fourth wave that will lead to another bear market low. The idea was that after those 5 waves up, we watch the relevant support levels for potential reactions for higher prices. Again, the warning has always been that the move up of the June low, it was only a diagonal, not an impulse. We had a diagonal structure only. That became very evident with that first move up here. And then we had some overlapping price action here in between as well. So we had only a diagonal. As I've said before, whenever we have diagonal structures, the pullbacks that follow, they need to prove themselves. Don't take this for granted. But it is still something that I want to observe because I know that a lot of cryptos, when they turn around, they create diagonals, okay, as a wave one. So it's always worth watching and observing, but it always needs some caution, cautious approach, because they can easily break down if it just was a correction. When we deal with diagonals, they can always also be counted as corrective structures. So all I can do is still track both scenarios, highlight the relevant bullish support levels, but issue a warning and then leave that with the viewers to decide what they want to do. I feel that's the best approach how to handle that. So far, we still haven't got a strong confirmation that a low is in. Actually, there is still zero bullishness here in the support area as a reaction. I mean, we had several reactions to these Fibonacci levels, so you can see how relevant they have been. But VeChain or the bulls have not managed to maintain or generate actually enough upside momentum for a third wave rally. So I'm still tracking the yellow wave count, but any low below the Friday low will likely lead to invalidation and will lead to a new bear market low. Okay, it will lead to a new bear market low. And I think we can potentially add a trend line. It's not super reliable, but I would pay attention then to the 1.23 cent level. That could be a potential support level if we make another low. And it might then form a large descending wedge or something. That is something that might be worth observing, but it seems to me that it's on a way to another low. Nevertheless, I will still leave the bullish scenario on the chart until it's invalidated. But as I said, this needs a cautious approach. A diagonal always has to prove itself. So far, it hasn't done that. And short term, in my opinion, price action would still suggest another low in line with Bitcoin, Ethereum. In fact, as you can see here, the move down was quite aggressive. The rally is corrective and it seems to be retesting simply that trend line from below. Another low below the Friday low would likely send it also eventually below that 10th of June low, and then watch the trend line for support. Yeah, that's my update about VeChain. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.